I get asked all the time from people looking to invest, should I construct a granny flat or should I buy a granny flat?
You've purchased your next 10 years worth of rental income by throwing 200, 300K in there.
Because you're not getting instant cash flow. And even if you did, you'd be paying tax on that money anyway.
Like personally, I wouldn't buy, like as an owner-occupier, I wouldn't buy a house that's got a granny flat at the back. Welcome back to Talk Property to Me. My name is Brad East.
I'm Aaron Downie, and today we're talking about granny flats.
It is a very popular conversation or topic at the moment.
Yeah.
We are seeing a lot of investors that are buying a property that's got enough room at the back to put a granny flat in or similar. So what we're going to talk about today is the benefits and the downsides of doing so, and how that affects your borrowing capacity as well.
Yeah, I get asked all the time from people looking to invest, should I construct a granny flat or should I buy a granny flat? So there's not a lot involved in it, but it's good to just shed some light on the benefits, pros and cons.
Yeah. So I guess it depends, doesn't it? The answer, short answer is,
short
is it a
answer
good idea?
is it really, really depends on where it is.
Yeah.
Like suburbs specifically, where it is. And obviously a lot of people aren't doing them in Sydney because most investors aren't contributing that amount of money, investing in $1 million property and then spending more money on a granny flat, or even more expensive in Sydney. But then if you talk about the markets where they are moving to, outskirts of Brisbane, Adelaide, Newcastle, all of these more affordable sub $1 million markets, it's suburb specific, and it really comes back to the demographic who are living in that area.
Yeah.
We know at a high level, fundamentally for investments, you want to try and purchase in an owner-occupied market, a market that's dominated by owner-occupiers because they're the biggest cohort in that market and they'll drive the growth in that market, and then investors make up the rest. When you have a bigger proportion of granny flats start to influence a market, you're changing the ratio of owners to investors in that market. And that's why I say it's suburb specific, because if you're buying in an area where you have affluence and you have people who like the feel of a neighbourhood and community and all of that thing, people will not buy a house with a granny flat and have a right of way down the side of their house.
No, or people coming and going at all hours. And
correct.
Yeah, because most of these granny flats are rented out. They're not expensive to rent out, are they? Majority of them.
No. I mean, you can, and again, it depends on where it is, but granny flats, you're sort of looking at $500 per week to lease out. 2-bedroom, modern kitchen, everything.
So quite affordable.
Yeah.
More of even cheaper than apartments, really.
Yeah.
But yeah, as you said, very much dependent. We look at Newcastle as an example. You'd be hesitant on buying a $3.5 million property in Bar Beach, and then throwing a granny flat at the back.
Yeah.
Yes, it does really well for you your out of pocket expenses each week. But who's going to want to buy that?
Yeah, and that's the thing. I think it's important to just keep in mind what the end goal is. Are you an investor where you need to increase your yields to be able to go and refinance and keep expanding your portfolio? It makes sense in a situation like that to add a granny flat to try and increase your yields so you can keep servicing more debt. But you've got to take into consideration then what house are you adding that granny flat to, and will it diminish its end value?
Yeah.
If it will diminish its end value, we'll then take that into consideration for when you're expanding your portfolio. I'm not completely against granny flats, but always consider the end value and the market that you're adding it to, because if you're buying in a suburb, a lower socioeconomic suburb like, say, Jesmond in Newcastle, a granny flat might make sense because
it's more affordable housing.
It's a more affordable housing, and most of that market is dominated by investors.
Yeah.
So you're going to resell to an investor who's the biggest cohort in that market. But then it also comes back to, investors make financial decisions, so they're going to take that into consideration with the resale cost or the resale price. So it really depends on the market itself and what the goal is for expanding a portfolio. It's just, I know a lot of people who come to me They're just mum and dad investors, and all they want to do is add a granny flat to the back of a property because they need to need to service the debt. But then it doesn't really make sense because not the typical strategy is what they do is they buy an $800,000 property. They need a $200,000 cash contribution to put a granny flat in the backyard. They then get an increased valuation based on the end value of $1.1 million. They refinance the granny flat expense to put that cash back in their pocket. But now they've increased their debt held on that property. Yes, they've increased their yield as well, but you've only increased yield to 5 to 6%.
But all you've done is purchase your rental income.
That's all you've done.
It's you literally you've purchased your next 10 years worth of rental income by throwing 200, 300K in there. Because
you're not getting instant cash flow. And even if you did, you'd be paying tax on that money anyway. But like you said, it's if you increase the end value of the property, yes, to $1.1 million, say in this circumstance, but you're still only cash flow neutral before expenses. So it doesn't really make sense unless you just have a serviceability shortfall. You need to increase your yields to keep expanding your portfolio.
Yeah, which we've talked about on previous episodes as well, that people are buying through corporate structures and then they're basically putting a granny flat in there. So then that corporate structure is then cash flow positive quite soon, literally within 12 months.
Yeah.
So then when they go to buy another property through another corporate structure, that property is then excluded. The original property because it's cash flow positive is excluded because you get a letter from your accountant saying that it's trading profitably and no expenses. That's the reason why people are doing it.
Yeah.
What people really need to think about is, yes, that is a good way to grow and get all these properties, 3 or 4 properties, but whatever you wanted to do, whatever your goal is. But then you've all got 3 or 4 properties of the same thing.
Yeah.
It's all the same thing.
Yeah.
There's no diversity in your assets. As location would probably be the only differing factor.
Yeah.
Which can be a bit of a concern.
Oh, massively. And that's the thing. It's so suburb specific. And I mean, if we can use a few examples to sort of put it into perspective for people, say if you're buying in a big audience of our listeners in Newcastle, so we use Newcastle as an example. If you buy a house in, say, Hamilton South, the biggest demographic in that area are families.
Yeah.
And a lot of them are high-income families or families who have a big portion of equity and they're spending around anywhere between $2 to $4 million. But they want a 600 square metre block, they want a 4-bedroom house, double lock-up garage, maybe a pool and a backyard. You can go and add granny flats into properties in the Hamilton South market, but you take that biggest demographic in that market who want those, say, $3 million 4-bedroom house properties with a pool and a backyard. You then add a granny flat to get a rental income of $500 per week, which it's probably not cash anyway because you financed the build. And then you've got a right-of-way up the side of your house. You don't have a backyard anymore. So when you go to resell that property, who are you selling to? Because the people who are buying in that market want a 4-bedroom house on 600 square metres with a backyard and a pool.
Like personally, I wouldn't buy, as an owner-occupier, I wouldn't buy a house that's got a granny flat at the back.
Yeah.
Because I like privacy. If I want to walk around the house naked, then I'm doing it. Exactly. You look in my window, that's your problem.
Yeah.
It makes that a little bit harder if you've got a house,
a
granny flat in the backyard,
And to just come back to that example, the reason I use that is Hamilton South's a high socioeconomic area. It does have a lot of affluence in that market, and it's driven by owner occupiers. So when you're changing the dynamics in that market and it turns to an investment, Hamilton South will do 100% growth. It'll be one of the top performing markets in Newcastle. But that property won't be.
No.
That property doesn't grow with the market. If the market grows by 100%, the owner-occupied 4-bedroom family homes and 600 square metres will grow at 100%. Your property is probably going to grow at 80% because you're reselling to an investor, and an investor who now has to spend, if it's a 4-bedroom house which is subdivided with a granny flat in Hamilton South, you're going to be trying to resell for 2.5, 3 mil. So you're going to try and sell to an investor for $3 million who's going to want a 5% yield on that property.
Yeah, so it's very location dependent.
It's location dependent.
And as far as borrowing capacity goes, yes, it does increase your borrowing capacity.
Yeah.
It's as simple as that.
Yeah.
There's more income. So yes, it does increase your borrowing capacity. The other things to consider as well is multiple dwellings on one title. Some lenders don't like that.
Yeah.
So it can limit them. Some of your smaller lenders probably wouldn't be real keen on that. Your big fours, like you can do mostly up to generally around 3 or 4 dwellings on one title. Not that you would want 3 or 4 granny flats in your backyard, but you can do that. So yes, it does increase your borrowing capacity, but what you've got to really weigh up, you sort of, in my opinion, you're giving up some of that long-term capital growth for some short-term cash flow. They don't always mix. There's no
it's
golden
not even
goose.
cash flow. All it is, the only benefit is serviceability.
Correct, for your next loan.
Yeah.
But I know we've made fun of the property bros on previous previous episodes. How am I going to get to 25 properties if I don't do this? Think about, you're better off having quality over quantity. Yeah. And I believe that in all aspects of life is go for something that is going to be good in 20 years, 30 years, not just for the fact that you want to tell people that you've got 8 properties. Don't worry about that shit.
I mean, everyone wants to buy a high growth asset that has, no cash contribution out of your back pocket every week. Yeah. But the thing is, it doesn't exist.
No. A good property in a good growth area, let's use Merriweather as an example, or Bar Beach. What's your average price in there? Maybe 2.5 mil.
Merriweather,
2 mil. Your average rental income yield there is 2.9%. It is going to cost you. We did the numbers on this on a previous episode. That's going to cost you out of pocket for 16 years.
But even when you go to more affordable markets, like there's been a lot of money flowing into Brisbane, Perth, and Adelaide because they're more affordable markets, and now Townsville, Darwin, Cairns, all of these other places. People are only buying in those areas because they need to be able to service the debt, and they've got increased yields there. They're not high growth markets, in my opinion. That's a different episode, but they're only buying there because of the yields. Even yields in these markets, they're still only 5%. You're not cash flow positive.
No.
So
I don't know. Well, we've done the modelling on it with the granny flats as well. You are literally buying your cash flow or your rental income. That's all you're doing. You just
pay 250,000 for a granny flat, get $500 extra to service that debt.
Correct. That's what you're doing.
And then at the end value, you've paid off that money with somebody else's money.
Yeah.
I mean, it's fine, but it does diminish the end value, suburb specific. There are some cases where it can work and it doesn't diminish the value. But it would be, say, a corner block or a block that, like I've just purchased one in New Lambton Heights, where it was the second house on the street, but we had side access for a laneway access. So in that situation, you can put a fence in the backyard.
So there's no crossover.
And then there's a driveway access for your house, separate driveway access for the granny flat. You've got a fence up in the backyard separating your house to the granny flat, but it's still one title. In that situation, you don't diminish the value of the front house because it's just a back fence with a house behind you. It's the same situation.
Completely separate.
But when you have a right, it's not technically a right of way because it's all on one title. But if you have allowing tenants to access your driveway to get to their granny flat at the rear, that diminishes value because it's someone on your property and removing your privacy.
And they're walking up the driveway at 3 a.m. absolutely smashed.
Yeah. Yeah.
For me personally, so if we were to recap, it can work. It's location dependent, but just bear in mind that it does significantly reduce your owner occupancy.
Yeah,
which can affect your capital growth.
And again, suburb specific, but market specific. Buy in markets where your primary demographic buying are investors. Like DY, for example, on the Northern Beaches, DY is like a medium price point of $2.5 million. 53% of DYs are investors buying in that market. So it's very suburb specific.
Yeah. So do your research.
Yeah.
Don't just think it's a blanket fix for all things.
Yeah.
I'm going to throw a granny flat at the back. Start thinking about, would that reduce the owner-occupier appeal in that area?
Yeah.
But that's it for today. I think what we'll do in a future episode is talk about other dual occupancies as well.
Yeah, well, dual occ specifically will be a better one, I think, just from granny flats.
But yeah, granny flats have been a very popular topic of late. So we just wanted to unpack, whether that's a good idea or not.
Yeah.
Thank you.
See you on the next one.